today's show, we're going to talk about Bitcoin, we're going to talk about Pump.Fun, and where we are in the cycle. It's going to be a very technical show, but it's very important for us to understand exactly the two possibilities of where we can go right now. So stay tuned right until the end because it's going to be a very, very dense show. 1, 2, 3, no time to waste. Let's get on to it. Let's start right now with the Bitcoin 7-day liquidation heat map. 7-day because these 7-day liquidation heat maps tell us in a bit more of a wide and longer term view where Bitcoin can go. Shorts at 116K just right now have been already wiped, and that was the signal I was looking at to take some profits. So I've taken and shaved some profits. Pump.Fun did amazing. I was talking about the Pump.Fun trade on my private group, and it's an amazing. I think it's the best altcoin on the entire market right now. But I've shaved some profits today. I was gonna do it yesterday. No, I think 2 days ago. But right now it's just it did amazing, okay? It did amazing to me. So here's the key detail. With that liquidity cleared, the biggest cluster, as you can see on the 7-day liquidity, is around 109.3K on the long side. So the shorts have been wiped, and now the question is, are the longs also going to be wiped? All of them, because that's the next magnet if we start seeing the price retrace. And I'm going to explain what can happen on a little bit more of a short-term vision where the price can go liquidity-wise on another chart. Right now, okay, this is a liquidity chart, okay, but this one is a little bit more about these high leverage, okay, high leverage positions, more of a short-term chart. So BTC is boxed between two major liquidity zones right now, where we could see the price go on the short term. So whichever side is going to break first, I think will determine what we're going to do next week, next couple of weeks. So you got to stay very, very sharp. So what we're seeing is very close to 118K, 117K to be more precise, and then 114. The 114 one, if you look at the price today, already started being shaved. So here's the question. Are we going to pump to 118, 117, or are we going to go into 113, 112 and clear that liquidity a little bit deeper? That's the question. If that happens, I think 109K is in play, but the overall market is still bullish and we can definitely see new all-time highs. But this month and the next, I don't have big expectations right now. I still expect a little bit more of a choppy, boring market. Let's talk about alt season. Everyone's saying alt season is coming, alt season is coming. Here's the truth. Alt season is already here. This is alt season. Over the past 3 months, 78% of the top 50 alts outperform Bitcoin. Alt season is happening. It's here. You just been on the wrong alts. I had some pump. So to me, alt season has been amazing. So this is a strong confirmation for the fact that alt season is already here. And this is why I'm taking profits, because we just crossed the actual alt season indicator. This is why I started taking some profits. When alts rally and they have like a sustained rally like we've seen in the past month, the flows eventually trickle down to smaller caps. So far it's been very different from 2017, 2021. I wasn't here and I was very late to the 2021 cycle. What I saw in 2021 was completely different from what we're seeing right now. Right now you have to pick the outperformers. Actually picking these 5 to 6 coins matters, because not everything is pumping and probably not everything is going to pump, because it's all about the flows. Okay, it's all about the buybacks. Okay, right now it's actually all about real fundamentals. So we're definitely in an alt season, but it's a targeted one. Majors are the ones driving the trend, and big moves like 3x's like we've seen on Pump.Fun, almost a 3x, 5x's in just a couple of weeks are already happening. Now let's look at this chart. Okay, this is a Bitcoin chart. This is one of those signals. This is the 60-day Williams %R chart. It looks complicated, but it's actually pretty simple. Okay, this is a full oscillation from extremely overbought to extremely oversold. And guess what? Right now we just left the extremely oversold zone. This is huge because this same exact setup has only happened 5 times in the past 2 years, and every single time it marked accumulation before. Of course, if it's accumulation, we're talking about accumulation for a big move, because we're still technically in a bull market. Right now we're there. That doesn't mean we can't go lower and the accumulation can't last a little bit longer. Okay, you might get a chance to still buy some of these things a little bit cheaper. So right now Bitcoin just triggered it again. This was triggered on August 29th, and history shows us that when short-term pressure gets flushed like this, it sets up stage for the next explosive leg up. Another very bullish signal is this chart. Okay, BlackRock, they have been shopping again. They scooped up 3.2K Bitcoin in a single day, and that pushes their total holdings to 757,000 Bitcoin, I think. Very close to 760,000. So think about it. That's almost 4% of the total Bitcoin in existence, just in the hands of this one institution. So here's the kicker. Every time these inflows like this are spiking, it is not retail driving. I don't think so. These are the biggest players in the world locking down supply while we're kind of like hesitating. I'm hesitating. So the question is, if BlackRock is still aggressively buying at these levels, what do they know that we don't? Because they have access to better information, insider information, better charts, better numbers, better everything, statistics. So they're buying, they know something. I always assume that. They know something, they know more, and they're not going to be wrong. So why are they buying? That's definitely bullish. Then we have this chart from Global Macro Investor from Real Vision. Shout out Raoul Paul and Julian Beaton. So white line GMI Early Workforce Activity Index. So this is what they call forward-looking measure. They're always about these forward-looking charts. So a forward-looking measure of real-time labor force activity. So So think of it as an early warning for what the job market is going to turn. And then we have the blue line, which is ISM, which is Purchasing Managers Index. So this is just overall business activity, okay? This is like a very big and broad measure for business activity. And then purple bars, kind of obvious, recession. So every time we have GMI, this early workforce activity collapse below zero, when we have these sharp drops, unemployment eventually climbs, and what we see next is recessions. But when GMI turns back up before the recession ends, it's, as they say, a reliable signal of the start of the next recovery. Here's why this matters in terms of like linking this to the possible bullish, overall macro bullish scenario. In August, we had jobs report that showed that unemployment was ticking up, but that's, according to these guys at Real Vision, that's lagging data, and the Fed is focused on this because they're very cautious and dovish. So meanwhile, the GMI index, this white line, is already turning higher, and so this is signaling us that the worst of the labor slowdown and all this unemployment, these numbers that came incorrectly, etc., is behind us. It's all behind us, and this is why some of these institutions are already positioning, like BlackRock, for the next leg up. So this is what they call the classic business cycle chart in terms of forward-looking indicators. So we see jobs weaken, which is this lagging data from the Fed, early indicators of a bottom and recovery. So if you look at this forward data from GMI, the Fed is still easing. It's going to start easing right now, and the real economy is, according to them, going to start ticking up while we're going to get rate cuts. So as you can see, like, this entire explanation is everything we want to hear, okay? Okay, this is like hopium. This is what we want to hear for alt season, okay? This is probably the most bullish chart I've ever seen anyone post right now, any quant post out there. So the Fed is about to keep easing into basically a recovery. What do you think is going to fucking happen? Okay, that's fuel for massive historical rallies, probably like the last leg of the entire cycle. Look, this is what these charts are telling you. I'm not saying I buy 100% into this, but this is very bullish. Like, if you see a dip, scoop it. That's what this is saying. Now let's talk about on-chain volumes and CX volumes. So after Bitcoin's lost all-time high, we had on-chain volumes hit around, as it says here, 62 billion, while a centralized exchange spot plus the futures were lower at just 41 billion, which is very good for crypto. And this type of difference, this skew, is very rare in overall market history. And the most important thing here is, at the same time, we now see a negative divergence. Prices pushing higher, but volumes are shrinking, okay? And this is very interesting. Like, what is happening, okay? What is the meaning of this? So we have a very, interesting rally right until that liquidity at 116K with very thin liquidity. This is kind of suspicious, to be honest. And this is why I'm still kind of scared. And I wouldn't be surprised if we see a little bit lower in the next week or in the next coming days, because rallies that are built on very weak volume are fragile and they can flip violently into the other direction when the liquidity, the very thin liquidity, vanishes. And so I would just say we could see two things. The volume spikes in a positive manner and we go all-time highs and then we have like a crazy rally, or we could see also the other side of the coin. And this is why market is still kind of undecided. This is why people like Ansem, there's kind of big traders out there taking profits. I still think I can buy things a little bit lower, but maybe my opinion is what the retail opinion is, and this is why we're gonna go high. So let's see in the next couple of days, but I'm still very careful. And what this chart tells us is we are at a critical turning point, okay? This is what this chart is all about. And then when we look at liquidity, which is bullish, okay, this is the liquidity flow index versus the Bitcoin chart, okay? Obviously liquidity in blue, Bitcoin chart in orange. Liquidity has been the real driver of this entire cycle, of the entire Bitcoin cycle, not the Federal Reserve. So since 2022, Treasury bill issuance has acted like what they call stealth QE, quantitative easing, and this is what's been pumping liquidity into this cycle, which is like a tightening cycle. What is a Treasury bill? This is a short-term government IOU. So these Treasury bills are debt securities, and they have maturities of like a year or maybe less, and they're sold at a discount. Very clear example for those of you not understanding. Let's say you give them 9.8K for a $10,000 T-bill, and then when it matures, you receive the 10K. So you earn like $200 of interest. That's what they are in sum. And this is why the markets have been climbing up despite us seeing rate hikes. We're in a new liquidity era, according to this. Every surge in liquidity lines up with Bitcoin rallies, and with rate cuts ahead, we're looking at double bullishness, okay? Fiscal plus monetary stimulus all at once. You tie this, the liquidity, with Real Vision's GMI indicators, it looks like bull porn, essentially, if you read it this way. So overall, I think it's still fair to say, like, ignore all the noise when the FOMC comes, because what matters is liquidity. Liquidity is going up, and as long as it stays elevated, Bitcoin and risk assets have fuel to run. That said, we could still see another dip. This is why I'm being careful, because as a trader, I want to accumulate as cheaply as possible. Now, finally, let's look at the pump.fun chart. Very interesting. As soon as I saw the breakout, it's up. I entered with big size. One of my best trades ever, by the way. Not because of percentages, but because of size. Almost went to new all-time highs. This is definitely some support, which has been taken, so far very bullish, but we could definitely see the price go a little bit lower, right into this cluster of liquidity here, right into this bullish fair value gap, right around 1.5, 1.6. It could definitely happen, and it could definitely tick all the way into like 1.8, 1.6, maybe even 1.5. But there's definitely some support right around here from the 22nd of July, 13th of August, then turned into support here on 4th of September. And this blue line here, this is the strongest, I think, support for pump.fun. I think it could go very close to here and very close to this upward trend line that got touched twice, can be touched a third time. So we can definitely see the price of something like this. I think it's 100% possible, especially if Bitcoin goes and touches that 109, 110k liquidity zone. So right now, if that happens, this is the coin I'm going to be accumulating more of. Okay, definitely even heavier. I'm going to enter heavier on pump.fun. So see you guys on Monday. Thanks for watching the show. I know it was a dense show. This is not a show about meme coins. Right now, we are not at the moment for memes. Okay, memes are not running. There's no liquidity for memes. There's no interest for memes right now. It's all about these altcoins and Bitcoin. And then when the flows start happening, then we're going to go back with force into meme coins again. Thank you very much. See you guys on Monday.